I'm Jennifer Goodspeed with the Goodspeed Group, and today we're going to talk about the mortgage process, more importantly, the pre-approval process. I get calls lots of times from buyers that want to go and look at a house that they've seen online or that they saw at an open house. And one of my very first questions I always ask is, have you talked to a mortgage lender? Today I've got Adam Snively, mortgage lender I've worked with for a very long time, I trust very much, and he's going to talk to us about the importance of a pre-approval. First of all, why do you need a pre-approval, Adam?
So pre-approval really gives credence to the buyer's offer. It allows the seller to know that we have actually looked at their finances and that they're ready to go to make an offer.
Now, if somebody gets a pre-approval, does that mean that they could close tomorrow?
No, the pre-approval allows them to make an offer, and then generally we need 30 to about 35 days in order to close.
If I've got a buyer that says, wants to write an offer on a property and they have not talked with a mortgage lender, how long can they anticipate that pre-approval taking? Do they have to come in and see you, or can they do it over the phone?
Yeah, great question. So the pre-approval process takes about 15 to 20 minutes and can be done over the phone. It can be done online through our website, our secure website as well. And just to give you an idea, it covers some things. We'll gather information regarding gathering the buyer's social security number to pull their credit report and review it for accuracy. We'll also look at their income, their source of down payment, as well as employment and residence history for the past 2 years.
So once they have a pre-approval, how long then would it take to close a transaction? I think you said maybe 30 days?
Yeah, so generally speaking, once we have an accepted offer, it takes about 30 days, and during that process we will document their income with pay stubs and W-2s, sometimes tax returns if they are self-employed, and then we'll gather bank statements, and we'll do verbal verifications to make sure they are employed with who they said they are.
So there is a difference between whether a mortgage for a buyer who works for someone who gets a W-2 for their taxes versus a buyer who works for themselves.
Yes, correct. So the one who just receives a wage, a W-2, will just need 2 years wage history for their W-2s, and then we'll also need 30 days pay stubs. For someone who is self-employed or has ownership in a business more than 25%, we'll need tax returns, 2 years tax returns.
Okay, very good. Well, I know that I require all of my buyers that I work with to be pre-approved. And this market is so busy that lots of times there are multiple offers, and if you haven't been pre-approved and ready to go, then that seller is not going to accept or even consider your offer. So definitely call Adam today if you are thinking about buying a house here in the next 6 months to a year, and he'll get you going on the right direction.